All right, so it is August 29th, mobile mailbox money. We're here today with Shane and Carlos. Shane, Carlos, happy to have you here today. Appreciate your time. If you could just introduce yourself for the viewers that don't know you.
Of course. Well, thank you for the invite.
Yeah,
Thank you
100%.
for the invite. And my name's Carlos Ruiz. I'm actually a financial professional with Global Financial Impact. I'm Shane Piper. Also, thanks Alden for having us on the show and being able to proper educate people with what we do and what you do.
Absolutely.
But I'm also a financial professional with Global Financial Impact GFI as well.
What are the assorted products that you guys have to offer out on the market for individuals that may be watching here today?
Right. So we have a huge menu. We call it a financial menu, and we're able to do it all. Retirement accounts, investments, annuities, infinite banking, estate planning, whatever our clients need, we just make a plan with them, show them a blueprint, direct them to one of our carriers that we work with, and assist them from there as their agents.
Absolutely. So it's a fully in-house program for the various products that you guys have to provide, from financial advisory ship, it sounds like, to infinite banking. I like the infinite banking program. You know, a lot of individuals find that a big pop word as far as on titles and wanting to delve more into those strategies. For individuals that you're talking to on a daily basis, soliciting the products that you have to offer, what are kind of some factors accounting for the market currently that people are looking at as far as products that you have to offer? Or, what's the majority of people kind of looking for currently? Is it looking to diversify their portfolio, or, ultimately, what's the popular product that people are coming for right now, given the current financial market? It's cool to see that, right?
Right. Yeah. Good. Well, with the market going on right now, obviously, during presidential elections and stuff, the market typically starts to dip down a little bit, right?
Sure. Speculation of what's to happen, maybe. Some people are waiting on the sideline to see which candidate may ultimately fulfill presidency. Great point.
Yeah, and one thing that we do with our clients when they come in and they talk to us, they say, hey, with these type of accounts, what is projected with the market? How is our accounts going to look throughout the process of the election and so forth, right? And one thing we can tell our clients is, hey, you're protected against that, right? You're never going to lose money in these accounts. It locks you in. The market's down, your account's locked in. There's a floor, which is one thing that I think a lot of our clients take full advantage of when they hear that.
Absolutely.
Yeah, so these strategies, especially the popular one, came out in 1997.
So, and what is that strategy? Oh, is that a specific, like, mutual fund, infinite banking? What is that to individuals that may not know?
Right. So great question. So a lot of people don't know that the infinite banking, the popular way, right? So it's actually called the Index Universal Life, right? So this was introduced in 1997. It's pretty much a life insurance policy attached with a cash value, right? And the insurance policies are protecting the account. This what protects the account. It's what allows you to mirror the stock market. You participate in the market. There's some accounts have caps, some don't have caps. Every client has different choices when it comes down to the strategies. And when the market tanks, like Shane mentioned, there is a floor, right? So there's a guaranteed when the market crashes and your account locks in. As soon as the market starts to go back up, your account mirrors the market, goes back up with it, and a lot of people are taking full advantage of it, especially because of social media right now. We've been in it for 7 years now? 7 years. 7 years. And when I first started, it wasn't as popular, maybe just term insurance, whole life insurance. And now everybody started learning about index. So it's a very popular topic right now. And that's one of the hottest things in the market right now.
For sure. And that's getting a policy, borrowing against that policy, and acquiring either stocks or alternative cash flowing assets and things of that nature, ultimately never diminishing the cash value of that policy, right? So you're not drawing down on the policy, you're borrowing against it, and then hedging your bets in a stock market play with some stop loss, or whatever you want to call it. So in lay terms, which is fantastic. That's what the Rothschilds do. That's what JP Morgan does. That's what big institutions do in order to facilitate the growth of capital, but also that generational wealth,
right,
at the end of the day, to be able to pass down these, gains, ultimately that gain value almost guaranteed. Guaranteed is a big word to say in the financial industry. But, that's a super golden nugget, right? I mean, to be able to have that at your availability. Obviously, you have to have the cash up front, right? To open the policy and gain that cash value to borrow against that policy.
Right.
You can't just go in and house hack a infinite banking strategy, with 10K down or whatever. You do have to have the capital in order to do that. And knowing that you have a strategy on the back end is extremely important as well, because to just go open a policy, burn that cash, and not have a plan for it, ultimately, obviously, you guys are highly unique in what you do with the different products and services that you have to offer, to be able to offer someone a vehicle to be able to have a ROI on that infinite banking policy, open the policy, find a opportunity for return on investment. That's a hard thing to accomplish. One hand, the infinite strategy to set that up correctly, as well as have a pipeline to know where to put that money, that's actually qualified for that program. You can't just go buy a car and try and flip it, kind of thing. You're really trying to buy stable assets, right? That return, a structured return, opposed to high volatility. Right. You're wanting to secure a stable program. And with mobile mailbox money, I mentioned to these fellas here, we both mutually agreed that deal flow is hard to find. Right. And when an individual may want to diversify outside the stock market, there's not all that many choices out on the market that make sense financially and actually cash flow, right? I mean, the average appreciation in the country on residential properties like 3 to 5%, and we just saw big appreciation. So is it going to appreciate more? Not sure. It just hit big, right? Sure. So if you're trying to invest on appreciation, may not be the time. If you're trying to invest on cash flow, well, rates are freaking 7%. On a DSCR loan, it's probably 8. Yeah. By that time, you don't cash flow. So to try and facilitate an infinite strategy, and you may not want to invest in stocks or whatever, you want to diversify additionally with a percentage of your portfolio outside the stock market or whatever it may be, those are tough things to come by. And I bring that up because we feel that this is a great opportunity for individuals to cash flow in notes, which is a contractually agreed upon return where you borrow against an infinite strategy, outpace inflation in a backed asset, a collateralized investment opportunity where you acquire a note that's cash flowing, consummated, and qualified at a higher than average return. Those base rates could be anywhere from 10 to 14%, which secures your deal, right? Right. So they come to you individuals, Carlos and Shay, and say, hey, it's time for an infinite banking strategy. I have $150,000. I want to diversify that, but I'm finding it scarce opportunities in the residential market. Oh, I'm watching here today. Here's the program, right? Right. Yeah. How would someone facilitate that? What are the steps to take? And how do we structure an infinite policy? Maybe we run through those steps of individuals that may need to call you now and set up a policy. Let's run through those steps of what that looks like and how someone can facilitate an acquisition like that.
Yeah, so one of the biggest things that I always tell my clients first when they come reach out to me for a policy, I'm like, hey, one of the biggest things we got to focus on is structuring it correctly. 100%. Right? Because I've seen multiple policies that they're great policy, but they were just structured not correctly. Sure. So that's one of the biggest things is finding a right professional that knows what they're doing, that can structure you a policy where you get immediate access to the loans. Sure. Right. And then when it comes down to, are any of your clients that want to use money for investments or any of that, loans with cash value insurance policies, have been one of the biggest things. Right. Reason why is because they call it double dipping. Right. If you got surrender value in your policy, you're able to pull out money from the policy. You can either withdraw or you can loan. So if you were to have $100,000 in the policy and you pull it out as a loan, right? Maybe let's just say $50,000. The $100,000 still stays in the policy, and you loaned yourself $50,000, and this is still growing with interest while you're using.
What is the rate? What is the rate when they borrow that money and they pay their own policy? Is that like through 6% when they pay their own policy back? Because you're taking a loan from your own policy.
Yeah, exactly. So you're pulling a loan from your own policy. So the interest rates can vary anywhere between a 2.5% up to a 5-6%, just depending on the type of account you have.
But that's like the max,
right?
6%, this something like that. So I didn't know that. That's cool to know,
right?
So as long as you find something that outpaces 6%, right, technically you've got a strategy, right? You're returning money on top of the money you borrowed from your policy, right? Is that an IUL? Is that what kind of policy is that to unlock that strategy? I'm a layman, I don't know the insurance all that well.
So, I mean, people have been doing this with whole life since like 1913, right? So they've been doing it for a very long time.
So it's a whole life policy with, what are the key, it's cash value, it
has its cash value.
Surrender.
It has a cash value, the surrender value, which you're able to borrow or pull out, right? And then assisted with the death benefit, right? Okay. So then that's when they created the IUL, which came out in 1997, just because these accounts are actually outpacing inflation. I mean, they're essentially averaging anywhere between an 8 up to a 13% return.
Sure.
Depending on what carrier you're with. I mean, we've seen companies clients get returns up to a 30%, up to a 10%. It just depends on what the market is doing.
Sure.
But the best part about it is when the market drops, I mean, you're guaranteed not to lose money in the policy. But of course, you are paying a COI, which is cost of insurance, right? But I told my clients, I'll rather pay COI instead of paying 20 up to 37% in taxes.
Sure.
Does that make sense?
Yes, it does. So that's investing in the stock market through an IUL, in just trying to follow you here, right?
So when
those returns could be anywhere from 8 to
13%
or even more,
exactly,
depending on the market, right? For sure. That IUL, what does that invest? Is that investing in insurance?
So it's with an insurance company, but these insurance companies, they go invest it into the S&P 500,
okay, got
the NASDAQ, the Hang Seng, just depending on where they want to invest it. And the client actually has a choice on where they want to choose to invest it.
Yeah,
that's the best part about it. They could choose your strategy.
Customizable.
Exactly.
That's obviously you're going to have your advisory role. Hey, here's a suggestion, where to put it at the end of the day. So that way someone's not flying blind and choosing stock, at the end of the day, right?
Yeah, and then Shane, want to add anything on that?
Yeah, no, and it's like he was on the topic he was talking about was like structuring them. I meet with a lot of clients and they tell me, how do I get an infinite banking strategy?
Sure.
And when I talk to them, I simply tell them it's just how you structure it. And there's no maximum and minimum, that you have to do to make an infinite banking type strategy. Most people I sit with, start off with 10,000, and it's a good thing that you're talking about notes, right? Because people can make an average return off notes.
Sure.
Right. And
100%.
And one thing I wanted to ask you is how do the people occur that money to invest within your notes? How do they get a notes from you? Like, how do you guide them to get to there?
Yeah. So average note purchase is anywhere from 70,000 to 150, right? And those acquisitions come with a lien position on title and a contractually agreed upon return. Granted, there is risk, right? There's risk in the stock market. There's risk in real estate investing. It's important to know what the risk is within a strategy. What is the risk within notes? What's the opportunity for that to possibly go non-performing, right? So it's a performing note. That individual that bought the house from us, we seller financed, right? We seller financed a manufactured home here in the Valley, top 10 market, to Miss Jenny May. Jenny May qualified through criteria of Dodd-Frank compliance, which means she has a 600 credit, no past criminal, no open bankruptcies, no past evictions, and verifiable income. She qualified, right? So opposed to a landlord and tenant strategy, we created an owner, right? So no longer having to worry about tenants, toilets, and termites, any maintenance or management, insurance. It's all covered by the homeowner. We draft a seller finance term promissory note backed by a lien on title, and we receive a contractually agreed upon return that outpaces inflation anywhere from 10 to 14%. That being said, some individuals find it where they're not as savvy and they don't want to acquire a whole note, right? They want a vested partner within the program. They want like a 10% return. They want us to diversify a small portion of their portfolio into an alternative asset that's cash flowing, 50 or 100,000 or whatever it may be. That provides us an opportunity to hypothecate, which means pledge that asset in order to garnish capital investment. And I hypothecate that loan for, say, like a hypothetical 10% return, and I make 4 of the 14, and they have a vested partner that knows how to do notes just in case anything were to ever happen. And we use our arm of the manufactured home brokerage to service that note at any given time. So at no cost to the investor, we're servicing it from A to Z, where they may want to diversify. Like I said, stocks are tried and true, right? Stocks have their fit in the market. There's no questions about it, right?
Sure.
But an individual, maybe high net worth, looking here today, like, man, I want to diversify a portion of my portfolio, 10%, 20% or whatever, to hedge the market, right? That's what savvy investors do, diversify their portfolio. And it's tough right now to even find opportunities, So to do that in a contractually agreed upon return, you have collateral, asset-backed lien on title. It's a qualified client, and that note's paying higher than average returns through an infinite strategy. Now you're double dipping.
Right. Yeah.
Wow, what an amazing opportunity, fellas, right? I mean, sounds crazy to me. That's a bank program. You're being the bank,
Yep.
right? That's what we all want. We want to collect checks and live on the beach and, have our family and, have a beer here and there,
Right.
collect checks without having to worry about it. That's the program. Financial freedom is what that's called in definition. Monthly checks in the mail, and not having to so much worry about the volatility in the stock market or in residential real estate or commercial real estate investment strategies. You hear all these horror stories of sliding interest rates on acquiring commercial properties, and then 5 years later they don't cash flow. Those are conversations that high net worth investors are having a challenge out in the market. So, happy to have you here today, fellas. Is there anything that you guys want to offer here exclusively? Maybe the people that may be watching you here today?
Yeah, so actually, I was just helping a client the other day with one of these strategies because they actually want to do some investment into some properties and everything. And they were like, Carlos, I have my money in some Roth IRAs, some IRAs, some 401ks, or like, how can I touch the money without any penalties?
Absolutely.
And I told my client, hey, well, there's these great accounts called FIAs, fixed indexed annuities, where we're able to roll it over into a policy where you could potentially get up to a 20% bonus.
So is that all three, a 401k, a IRA, and a Roth? You can, any one of the three or all three could roll it into...
You could roll it over into a fixed indexed annuity.
Fixed index annuity.
Fixed annuity, as long as it's eligible. I mean, you would have to sit with the professional to make sure that your account's eligible to get rolled over. Yep. And what it does is we roll it over. You could potentially get a bonus up to 20% on the balance of your account with the carrier you're moving it with. And one of the strategies we'll help our clients with also, they're like, hey, with these companies, some offer that you're able to pull out a free withdrawal up to 10%. And then
we not only got a 20% bonus, you also get a 10% withdrawal penalty free.
Exactly. So
from a rollover of a fixed index, from an IRA, a Roth IRA, a 401k to a fixed indexed to a 10% penalty free and a 20%
bonus up to a 20%, just depending, 6 to 20. It just depends on the company, right?
20%.
Yeah. I mean,
talking numbers here.
And think about it. I mean, we're helping you recapture some of the money that you potentially might have lost in the market.
Absolutely.
Right? And then we'll do the withdrawal, the 10% penalty free, and dump it into a IUL policy, and hoping that gets structured into an infinite banking strategy. And we're moving money every single year into that policy, turning taxable money into tax-free money, where they would potentially able to touch that double dip on it like we were talking about.
Yes.
And a lot of clients are doing that right now when it comes out to their Roth IRAs, 401ks, all that good stuff. Shane knows a lot about that stuff too.
Yeah. So I'm one of the guys who sits with a lot of the ones who are rolling over a ton of money. I'm actually helping a few clients to do that. And one of the clients, he's gonna get he's rolling over a couple million, and he's gonna get almost $1 million in bonuses just to move it over. And then if we do the right thing with the client, and let's say they want immediate liquidity, that means within anywhere from the first month to the third month, or even the first year, depending on how long you want to wait, you can take out 10% penalty free.
And invest those dollars, right?
Exactly.
Yeah. You not only took advantage of the full arm of the strategy, but now you have some cash to go, do something out in the market.
Yeah, no, and it's a lot of the clients it's blessings, because not only is it going to be like their retirement money, it's also generational wealth, right? So these accounts get passed down in generations to generations, right? And what Carlos was talking about is actually what witnessed him helping this client, where He helped him set up a FIA a couple years ago. The client reached back out and said, hey, my account's doing pretty good. What else can I do? And he said, look, man, we can actually set up a IUL an annual premium one. So you just do one premium yearly. And he's like, well, what's the benefit of that? He goes, I know you have 3 kids. If anything were to happen, not only are you going to get the FIA, but then you're also going to set the IUL, and you're going to build generations to come, and your family's set for life now. So it's a blessing, the things that we do.
Yeah, for sure.
And we also do it all. I mean, we do term insurance, whole life, index, so whatever our clients want, we'll assist them from there.
Yep.
So we're not pushing any type of service. We're just like, hey, this is what we do. This is our menu. What do you need help with? Right? And then we kind of guide them from there and educate them step by step on, whatever area they wanted to take a look at. So that's one thing we love about it. We don't really feel like we're pressuring our clients. Hey, get this. Just more, hey, what are your goals? When do you want to retire? How's your income? And we just go ahead and design a plan for them and show them the options and go from there.
Yeah.
What are some of the common life events you see people fitting into that you're talking to on a regular basis? Is that like job movement? Is that moving? Is that, what could that be? Common category. If someone fits that today, where should they call you?
Where should they call us? Like our phone number?
No, it's like what kind of category is a common category of person that's coming to you guys? Is it a life event that happens where they're like, hey, I want to get a policy or look to an advisor, or is it them moving? Is a lot of people moving, or is it just kind of an all full buffet of kind of individuals that you guys are talking to? Is it people rolling over more stuff because they move companies? What's the common person? What's the 5 people that walk through the door out of 10, that kind of fit the same category?
Right. So everybody right now, their biggest goal is just protecting their assets.
So it's people for asset protection.
Asset protection.
Great point.
Building accumulation where it's not, because everybody's scared to invest in the market right now. But it's the only place you could potentially earn returns, right? So it's kind of something you feel like you need to do, but a lot of people don't know that there's options where you can protect those assets, where you can mirror the market, grow with the market, and when the market drops, you don't have to lose anything. This goes with index universal life or fixed index annuities, right? So one of the biggest ones is just people just like, hey, I just want to protect my assets, or whether it's a life insurance to make sure that their family's taken care of. So that's mainly the common one. It's just like people coming to us, be like, hey, how can I protect my assets, protect my family, just protect what I worked so hard for. And most importantly, I forgot to mention is about our estate planning, right? Making sure that if when they're gone, that there's something in place that says where all those assets will go to, so you don't got the government trying to interfere or making the family jump through hurdles just to claim the assets or life insurance or...
Absolutely. And so it's a high net worth individual that has capital, right, and wants some asset preservation, asset protection, and maybe somewhere to go with those dollars, right? Not only opening a policy to ensure that you pass down generational wealth the right way, post outside of probate and all of those things, ultimately, but also be able to know where to put those dollars, right? Mm-hmm. To additionally diversify in the market and double dip, maybe even in an infinite strategy. Those are all big ticket items, I think, that individuals may be watching here today wanting to facilitate. I mean, asset protection, who doesn't want to protect their assets? You talk to a high net worth person, that's a big thing to them at the end of the day. So Carlos and Shane, if you could just tell people where to find you, where to call you, and possibly why they should reach out to you today.
Yeah, no. So I'll start it off. First and foremost, the best thing that we get to do is help our clients go through, the financial education and build a financial roadmap to get them to where they can be financially free, at retirement or set their kids up to go to college for free. What is it ever the client wants, we help them set that up. And good thing I can say me and Carlos are going to launch today with you is anybody that comes through these videos or hits us up and says, hey, I saw you on Alden's podcast.
Love it.
And all good stuff. We'll do a free financial review for them.
Oh, is that an exclusive offer?
Yeah. So we'll do a free financial review. You just got to let us know. We can either meet at our office or like we came to you. We met you at the cigar lounge.
Yes,
talk some business, so we can meet anywhere you guys want to meet. And
even Zoom.
Yeah, even Zoom. If you just want to do it from the comfort of your home and meet us on a Zoom, we can definitely do that too. And where you can find us is I'm going to get my phone number out on you.
Yeah, go.
All right,
go
cool.
ahead.
You can contact me at 602-677-2829. My name is Shane Piper.
Yeah, so one of the biggest reasons you guys would want to reach out is just because we actually sit down with our clients in the system, like, hey, what is it that you need? What's your goals? We're trying to find out what you really want. And then we start to take a look at your financial portfolio, whether you have one or not, and then we create something for you, show you the options where, you know, type of accounts you can get, and, you know, just that education. I started the business 7 years ago, but I started off as a client, right? I used to do construction for like 3 years. I didn't know how the 401k worked, any of this stuff, until I sat like someone like myself, which was actually his wife. That's how I met his wife, right? Like, she sat with me, showed me how everything worked, helped me out with the plan in less than 30 minutes, right? I walked away with great knowledge, and that's how I started the industry, you know? And you guys can reach out to me at 602-525-8611, or you guys can message me on Instagram, Carlos Ruiz _777.
That's Carlos Ruiz and Shane Piper here today, and I'm Alden Wardo with Mobile Mailbox Money and Silvercrest Opportunity Fund. Silvercrest is an accredited investment fund for investors to diversify into cash-flowing assets and earn a satisfactory return. And Mobile Mailbox Money is here today podcast. View the other podcasts that we have, the blogs we have going of other young, prolific business professionals out here flexing in Arizona, right? Trying to ultimately forge the path here in Arizona business. So appreciate having you here today, fellas. It's been a pleasure. Thank you so much.
Thanks for having us all.
Thank you for having us.
Absolutely. Bye.